Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar advance extends as it retests weekly highs and also the resistance, which is capped around 71.2055. As the key events slowly unfold, the US dollar, which measures the greenback strength against a basket of 6 major currencies, slips further to 109.96. Meanwhile, the Reserve Bank of New Zealand raised its official cash rate by 50 basis points, or half a percentage point, to 2%. This now its fifth rate hike in a row and also its highest level in 6 years. Meanwhile, later today, that is, investors will be looking for clues concerning the future of monetary tightening when the minutes from the latest US Federal Reserve Open Market Committee, the FOMC, meeting from the 4th of May is scheduled for release on Wednesday. Following that, we also get the Thursday's outlook on the US gross domestic product, which is the GDP, and along with that, Friday's personal consumption expenditure, which is the PCE index. This will give us further direction in the near term or some guidance of how the US is unfolding. Against that, with the high inflation, does give us further concerns on how the markets will perceive these figures. Nevertheless, looking at the current pattern, if the market can clear 71.55 for the Australian dollar, then we are looking for a further extension that could see 72.1520 on the cards. This in turn sees the euro challenge the level around 107.40. Now it is a bit of a key point because we did retreat from there today. Nevertheless, the market is still looking to that topside challenge. That is, any pullback which should find support around 106.25. A clear break would need to see a rise above 107.85. But at the moment we have seen an ambush after printing an intraday high of 107.38. Moving on to the dollar yen, the market is weighing heavily on this support level seen around 127. We haven't seen a clear break there after seeing a drop to 126.64, but I feel from the current pattern we've got an ADX trending, should see further indication to the downside and look towards either 126.45 or down towards 125.1525 as the initial target. The British pound was ambushed overnight after challenging the reading of 126.40. What triggered this was the market got the release of the UK PMI, which showed a sharp deceleration in growth during May and has raised concerns about a possible recession. This also has given mixed views on whether the Bank of England will lift its interest rate by 50 basis points or not after these figures. Then again, last week, the annual UK Consumer Price Index, or the CPI, did rise to a 9%, and therefore was the first time seen these highs since 1982. So it is a bit of a mixed conflict of how the market will anticipate the Bank of England at its next meeting. Still, though, from the bearish challenge from that top side around 126.40, the market may pull back towards 124.65 before seeing another upside attempt. I am also looking at this pattern because if it is an inverse head and shoulders with a shoulder, head and shoulder on the right side here, a break of 126.40 gives us a measured move up towards the 130 region. So do keep an eye on this pattern. Well, as I mentioned, the Reserve Bank of New Zealand raised its official cash rate by 50 basis points and lifted it to 2%. And it's seen as the fifth rate hike in a row. Along with that, its highest level in 6 years. This has seen the Kiwi rally hard against the sterling and now sending the market lower through 193 and now has 191 on the cards as a potential challenge. Finishing off with gold and oil, the market is a little bit hesitant as we get closer towards the 1,870.80 level. In light of the pattern here, it has buckled and we may be getting close to the top. But I would like to see the dollar index recover sharply, as we could still see the market challenge this top side as safe haven is returning back to the market due to the uncertainty of whether or not the US will slip into a recession. Still though, any pullback sees the support around 1,852 and then down to 1,846 to 1,838. Wrapping up with oil, the last 4.5 days, the market's been trading sideways and still currently is. And nevertheless, the pattern still looks to me that we could see a breakdown. That is a rejection from the 110, 112 area and look towards the 106, 40, 70. Well, that wraps it for the day. Thank you very much for joining me. And as always, look after the intraday report. And I hope you enjoy the rest of the day.